As we look towards the third quarter and the second half of 2018, we're seeing a market which is markedly different than where we started the year. Worldwide growth has now been replaced by worries about trade wars. We have a stronger dollar which is having a negative impact on commodities in general. Taking a look at the energy sector, we are also facing a quarter where the worries about supply risk will continue to underpin the market. We're going to see sanctions against Iran being introduced. We have problems in Venezuela. We potentially also have problems in Libya. It makes us basically believe that the oil markets in the near future is basically one of focus on supply disruption at the beginning, which will support the price. But later on, as the trade war intensifies, we're going to have a potential negative impact on global growth and thereby also demand for crude oil. So we're seeing oil being supported here during the third quarter. Looking at the charts, we are potentially settling into a low 70s to low 80s range. I think that will remain. There is obviously a risk of a spike in the short term, but overall the worry that the current trade war will lead to lower demand growth is going to keep the upside capped as we move deeper into 2018. Precious metals are under pressure from the stronger dollar. We have seen investors basically give up almost on the trade. We have seen several failed attempts to break higher, and now we are once again testing the lower end of the range. We really need to hold levels here around the 1235, 1240 area in order to establish some support. We need to keep a close eye on the Chinese yuan, especially against the dollar. We've seen the yuan weakens over the past month or so. As long as that weakness continues, gold is going to struggle to make any recovery here. So at this stage, I think potential buyers, they will be sitting on the fence, potentially looking for a break back above the 200-day moving average before they start to re-engage. And just find on the grain markets, it is troubled by the trade wars because Mexico is the biggest buyer of US corn, China the biggest buyers of soybeans. We need to see how these developments unfold. Fundamentally, the market is starting to show improvements, but so far we're not seeing that in the price because the market is so transfixed on the trade war worries.